I want to dive right in here and head over to Chicago and find out what's going on in the grain markets. We have the corn well off its earlier highs this morning, and I want to go talk with Scott Gecas. He's with Prosper Trading Academy in Chicago, and he joins us from the edge of the trading floor there. And Scott, I'm looking at the corn prices only 3/4 of a cent higher now. Not a lot of enthusiasm, but after a higher trade overnight in all the grains, it seems like everything really softened up after the open. I just wanted to find out what you're hearing on the floor related to that.
Yeah, I mean, with all the headline risk, I mean, that's still going to be the main story going into everything going forward, even with the weather going back and forth. So yesterday we seen that Trump rejected the Chinese offer to have officials come to prepare for the trade war talks later on in the month. So that brought a lot of pressure into the soybean market, not so much in the corn or wheat, but definitely in the soybean market. We still have a little bit of a bump up after that. That 900 level is very key in this soybean market. We're watching that just with the headline risk going back and forth. The option volatility is anywhere from 3 points higher than normal, above the 20-day average. The biggest volatility increase that we have seen was in the wheat market. That's running about 10 points higher than normal. So with it, everything is definitely skewed to the upside. You're seeing a lot more active call buyers than put sellers or put buyers. So we're going to keep an eye on the headlines, and that's what's driving these markets right now.
I understand in Brazil, the farmers are already starting to plant their second or their safrinha corn crop now.
Yeah, and that's a key factor because usually around this time there isn't, too much of that planting. So they have already had planting anywhere between 8 to 12, some in other places about 20% already. So that is definitely a key factor going into the summer months. We're going to see how that's really going to affect things.
Let's take a look at our prices then, and we'll get everybody updated here. We'll start with the corn, and on the corn, as we mentioned, just fractionally higher. Now it's only up a half on the March at 379.5. Let's go to the soybean trade, and right now in the March contract, 6.5 higher at 915 3/4 after posting a high of 918 1/4. We have July 6.5 higher as well. Now on the wheat, we had some strong gains for a little bit. We have March Chicago wheat now at 524.5, so that is now 3 1/4 higher, about a penny and a quarter off its earlier high this morning. We have July 3 higher there. In Kansas City wheat, currently, you have the March contract at 513. That would be up 3 1/4 cents. July up 3 at 531 1/4. Minneapolis spring wheat trade currently has the March contract 2 3/4 higher at 574 3/4, and we have July 3 1/4 higher at 586 1/4. On the cotton market this morning, we have the March contract now 41 points higher at 73.54 cents per pound, but it has been on both sides of unchanged here so far today. We'll come back in a moment, and we'll head back to Chicago. Talk more with Scott Gecas right after this. Scott Gecas is with Prosper Trading Academy, and he is speaking to us directly from the edge of the trading floor in Chicago. And Scott, as we look at the livestock trade, some folks wondered if maybe the weather would have an impact here on the cattle or hogs. Maybe in this case, the way the frontal boundary was lining up and everything, they thought maybe it would have more impact on hog deliveries, but yet the hog market is the one in the tank today. Let's walk through these, and then I want to get your comments on our livestock futures right now. On the cattle trade, we're mixed, and narrowly mixed at that. We have February down just a nickel at 125.08, April down 15, and you have the June 23 higher. Everything else from there on out is up about 40 cents. Now, on the feeder cattle side of things, here we have the March contract now 68 higher at 142.18 after it posted a low right at the open of 141.28. So we bounced off of that very quickly by about 90 cents or so. April now 45 higher at 143.40. So a higher tone in the feeder cattle trade and the deferred live cattle. However, you look at the lean hog trade, and here you have the February down $1.08 now at 60.40 on the low of the day. We have April lean hogs down 2 1/4 at 63.85. That's only 2 ticks now off our low of the day, well off our earlier high by nearly $2. So quite a drop here in this hog market. Scott, I go back to you and wondered what the fundamentals are that are driving this hog market here today. Anything?
Yeah, with the fundamentals just going back and forth, it's with the weather, it's going to affect the markings as well as all the trade war talks. So the deferred contracts are still putting a hefty premium with the hopes that China is going to be an aggressive buyer. So we're going to stay bullish with the hog market, particularly above 60. You see a lot of that skew is definitely to the upside. There's about 400 or 500 calls that traded on the 63 line. That's significant when the open interest is only roughly around 8,000. So that is confirming that there's still more upside to go, but we're going to keep an eye on that 60 level. As far as the cattle goes, after we hit the contract highs, you've seen a strong sell-off. You know, cash traded yesterday between 122, 123. That's definitely driving the price. For cattle to stay a little bit bullish, we need to hold that 125 level.
Okay, what do you think the odds are of that right now based on what you see in the options tables?
With the option table, I mean, still, even with the cattle, you see a little bit more upside calls. That skew is definitely to the upside. We have a huge fund long position. Open interest is still climbing, which still remains that there's other people looking for a little bit more stronger tone in the cattle market, even with such a strong demand that we currently have. But as far as the technical chart goes, we have to hold that 125 level. Otherwise, you're going to see a little bit more liquidation.
Thanks for pointing that out. All right, I appreciate the price targets there. Scott Gecas with Prosper Trading Academy right there in Chicago. So that's the very latest there, Janet. Feeders back up on the plus side today. Hogs dropping like a rock right now.